you often hear about, deals being acquired and everyone gets excited, or deals being sold and the returns generated. But, every time you acquire a deal, the way I look at it is it's just kind of, pre-work, or you're just starting the race, you're just getting to the starting line. And on average, a deal is held for 60 months, or at least that's what's projected. It takes 3 months in the beginning to buy it and 3 months to sell it. So 90% of the time that you've got this deal is in asset management, but it's probably only 10% of the time talked about.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Our guest today, his name is Shane Thomas. He's co-founder and managing partner of Catalyst Equity Partners. His focus is on acquisitions, asset management, and investor relations. They have 9 properties, 1,900 plus units, 300 million assets under management. They're in Texas, Georgia, and Florida. He has a background actually as a CPA, and he's it's a great background. You're going to hear me talk about that as far as somebody in this business and understanding numbers, but just expertise in large scale property management and analytics and process improvement. We dive into a number of things around that. This is a great segment of interviews here, a couple shows with Shane. I know you're going to enjoy. We dove into asset management and really how that bleeds over into communication with your investors. You're going to hear that over the next 2 days. I know whether you are an active operator or a passive investor, you're going to learn a lot from these segments with Shane. Shane, welcome to the show.
Hey, Whitney. Thanks for having me. Appreciate the kind intro. Excited to be here.
Yeah, honored to have you on. I know you had mentioned, I think we met few years ago at a conference, and so it's great to connect again and just bring out your expertise for the listeners and myself, because I know you and I were chatting about a hot button that's going around right now. I think that just every operator and passive investor are asking some questions about some things we're going to talk about today. Before we get to that, tell us a little more about your background, how you got in this syndication space. It seems like everybody comes from different walks of life, right, or different industries, and so what was that for you?
Yeah. No, thanks, Whitney. I'm a recovering, I guess, CPA to start. So I started my journey many years ago. I'm a management consultant, CPA, worked in corporate America for a long time, but I always had the real estate bug, if you will. So I actually started buying single family in 2009, 2010 in Toronto, Canada, where I'm from. Not knowing much, just knowing that, hey, I just wanted to kind of plant some seeds, and it was more from a long-term investment. Made my way down to the States in 2010. And then in 2015, kind of was at a crossroad in my life where I had to kind of decide if I was going to continue to climb the corporate ladder, or if I wanted to go out and do something on my own. So kind of long story short, at that time, real estate had done well for me in Toronto, and I wanted to kind of replicate that in the US. And, being a finance guy and I had single family before, I just knew that multifamily resonated with me more, the fact that you could force valuation based on NOI, treat it more like a business. And so, kind of started down that path to figure out how I could buy, kind of multifamily. And at the time, it was smaller multifamily, 15 to 20 units in Chicago, where I lived. And then long story short, ended up stumbling across, kind of investing in multifamily syndications. In 2015, I started passively investing as an LP. And then once I, kind of did that a number of times, I realized that my skill set and my interests, really peaked, and, met my now business partner at networking event in Texas. And yeah, now we've got a company, Catalyst Equity Partners. We've got, we've done close to 2,000 units as lead GPs in Houston and Dallas. And, we've got, construction management in-house. We've got a small team. We use third party for management, and really focus on value add. We love heavy renovations. We've done everything from Class C to Class A multifamily.
Yeah, I appreciate that. I think your expertise, coming from a CPA background, like everybody needs that on the team. I feel like, the more we've been in the business, it's like, man, having that we haven't for a long time,
Right.
I mean, having somebody internally, we've had third parties that have helped us,
Right.
but man, having somebody internally like yourself that has like a CPA, just numbers background, right? I'm not an accountant by trade,
Right.
and I don't want to have to tell my quote, accountant what to do.
Right.
So,
Yeah. 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 No,
uh,
it definitely helps. But as you know, Whitney, it's one of those things, right? Like it's a team sport, and kind of there's different
yeah,
elements to the skills you need. And I think, in the beginning, I was doing a lot of that accounting review function, but just like scaling any business, I've kind of, I'm still, kind of maybe the lead on our team, but we have a fractional CFO that we use, to really dive in because, it's one thing to review books for, 2, 3 deals, but when you've got 9, 10, 11, things
yes.
change. And so, but yeah, I think I know enough to be dangerous. But
Yeah.
it's been a while. Yeah,
No, that's awesome. Well, it's not, and that's another point. It may not be your highest and best use of your time now either,
exactly.
right? And we're going to talk about some things that you've become an expert in now, and you all are doing well at, which I want to bring out to the listeners. But it's that's a good point there to make. Is like, well, you had this skill set and you still have it, but there's another piece that's a better use of your time, right?
Right.
And so let's dive into that. I know before we started recording, we were talking about your focus on really the asset management communication with investors, and I'm hearing it all over the place, right? It's not just you, that had brought this up lately. Not so much on the show, but I just mean talking to investors or talking
Right.
to other operators. Man, everybody's trying to figure out, how do I communicate better with our investors, or LPs are saying we're not getting any communication from a number
Right.
of of groups that we've invested with. I'm hearing that way too much. But I want to dive into that and how you all do that so well, right?
Yeah. 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 No.
I want to talk about the asset management piece too, because I feel like that plays such a big piece of where the information comes from and starts, and so let's start with some of that, and maybe give us some details on your asset management piece, or operations, right? And then we'll move to the communication piece to investors and how that all works together.
Yeah, yeah, no, I think it's a great question. I think, it's one of those areas in this business that's often overlooked because it's not the glamorous side, and you often hear about, deals being acquired and everyone gets excited, or deals being sold and the returns generated. But, every time you acquire a deal, the way I look at it is it's just kind of, pre-work, or you're just starting the race, you're just getting to the starting line. And if you just look at it just based on just pure math, right? I mean, on average, a deal is held for 60 months, or at least that's what's projected. It takes 3 months in the beginning to buy it and 3 months to sell it. So 90% of the time that you've got this deal is in asset management, but it's probably only 10% of the time talked about, And so anyway, I think it's come to light now, obviously, with the market, being what it is now and changing. And the reality is, when we charted in 2015, 2016, there was a lot of tailwinds. And, I think, I wouldn't be alone in saying this, that a lot of people, there was a lot of, sins that were forgiven, if you will, because rent growth was, astronomical, or cap rates were compressed. And, the tides definitely changed now. And so, we've always, put asset management as kind of the lifeline of our business, right? We know that if we cannot, perform on our deals and service our investors, right, then, those investors are not going to come back, and we're not going to be able to build our track record, right? And, and I think, having that view up front, and with my experience as being an LP, and my partner's been an LP prior to us being a GP, we came out and we said, asset management and ensuring that our investors know what's going on, is paramount to our company, right?
Mm.
So what we've done, from an asset management perspective, is we've tried to just build processes where we've now got an asset manager in house that's full time, that 100% oversees our properties. And before, my partner Prashant and I were doing that, but I think the reality is, in this business, we're handing over keys to folks that, aren't highly compensated, or, don't have a high level of education. And we're expecting them to manage, multi-million-dollar assets, right? Where we have, significant plans in terms of improving them, adding other income and stuff like that. So there's a lot of sophistication that's come into play, and being able to manage that and influence those folks to be able to get the results that you desire, right? And so it's a lot easier said than done. But we, every deal that we buy, we go to the property management company and say, hey, here's our business plan. They work with it with us. Then we come up with a 90-day and 180-day plan. So it's very clear, because most folks, that work in the business at the property level, right, they're just going to do what they've done previously, right? They've been in the business for 15, 20 years, and they're just going to buy a deal and operate it, right? So we set expectations up front, 90-day plan, check in every 30 days on those high level goals, on a weekly basis. Our asset manager, we've got like a dashboard. We've got different property management companies, so it's not fully integrated, but we've got a set of KPIs that we ask our managers to fill out every week, right? And we're diving into those KPIs and trying to look at them as leading indicator, like, hey, if our renewal rate's low, why is that? Is it, and asking the questions, why are people moving out, right? If our traffic, is not high enough to generate the amount of applications we need, what can we do differently, right? So every indicator, there's usually, 3 or 4 ideas or whatnot. And then making sure that, each of our business plans are unique. We've got a couple of deals right now where we're implementing bulk Wi-Fi, right? And that, has some resistance, to the residents. Residents have some resistance. I was on a call this morning where property manager was like, hey, I got an earful from this resident. They have a contract with their other service provider, and we're putting this on. And we said, no, well, if they have a contract and they could, prove it, we'll just say they don't have to get on board on our, internet until the contract's done, right? So it's being close enough to the ground, and so we've just built these processes where we've got weekly calls with the property management company, then monthly review calls with the regional manager, and that helps me and my partner, help articulate the commentary to our investors, right? Our asset managers talking to our construction team, right? So our construction manager joins the asset management calls, on a monthly basis, just so they can know how many units we're doing. So everyone's talking to each other, because what we've noticed is that when you stop the communication, a lot of things break down, right? And then from there, what we do is we have our monthly P&L reviews, right? And then we do distributions on a quarterly basis. So then on a quarterly basis, we work with our fractional CFO to really dive deep into our financials, understand our cash position, see what's coming ahead. I think a lot of times, a lot of people are looking at what's happened and, we've got some cash now, so let's distribute. But we know, hey, we've got, for example, older assets, and, we may need, X amount more in capital to improve these deals or whatnot, right? So we have to hold that back. So anyway, it's, I'm trying to go from, where we are on a day-to-day basis, and we kind of bring it up top, and then we're able to articulate the results financially, and, CapEx wise, and ultimately distributions to our investors. I know I've said a lot there, but, we try to, work from give them the big picture, make sure they're executing day by day by these different KPIs that we track, and then able to explain the story to, someone as an investor so they can understand.
Yeah, no, that's that's a lot of great detail there. I want to dive in a little bit on, because it is a process, and the more we want to communicate well, we want to communicate often, but it's taxing to the team, right? As we've gotten many, deals as well, and we're trying to do updates on all these deals, we're right there with you. It's like pretty soon, like this is a lot of work for a few people every month, right?
Yeah.
I mean, it is a lot of work, and I think oftentimes LPs don't maybe realize how much work does go into making those updates happen, but it still has to happen.
Yep.
It still has to happen.
Yep.
So, but the more we can streamline that process, the better, right? And obviously, the more accuracy and all those things, and the more we're communicating. And I liked what you said there. I wrote it down. When you stop communicating, things break down, right? Or there is something broken, right? If you're, it's why you're not communicating, maybe. But speak to the information that's expected to come from your property management company that helps you to maybe streamline some of the communication with investors. We're going to get to the communication, in a minute with investors. But I say as the asset manager or the operator, talk about what's expected exactly, what kind of reports on a monthly basis, how is that helping you all to generate the best information, for investors?
Yeah, that's a great question. I mean, I think the good thing about this business is that there are great systems that these property management companies have to get, all the data that you need. I think, from a summary level, we obviously have our P&L, our balance sheet, cash flow, and whatnot. But those are what I basically financial statements, right? But really, what I look at on a week-to-week basis are more of the leading indicators, which are occupancy, our leasing, our trends, what's our box score, how many units are, vacant, not rented, for how long, and so our traffic, where are the sources of our traffic, our renewal rates, I think, are very telling, and a key metrics that we track across every single portfolio, and we've done this for long enough that we can figure out, like, okay, this trend is really low, and is it a seasonality thing, or do we just not have good leasing? And then we've got a few things that we've developed that are like, okay, if this is happening, there's like 3 or 4 things at least we've seen that most likely are, or at least 80% of the time, are the root cause, and so all that information helps us on a weekly basis make changes, right? Because the reality is that the financial reports you get, 15 or 20 days after the end of the month, and it's way too late to affect change, right? Yeah. And so we're trying to make changes, I mean, quite frankly, now it's daily, but at least on a weekly basis. And then, by the time I'm reviewing the reports that my asset manager and fractional CFO put together, I've already got the story, because I know from a weekly basis, I've seen the trends, and so there may be something that happened in those 2 weeks that, that I may have to update investors on. But by then, we kind of already know, like, August 1st, I already know how July financials are going to look. I don't know the exact numbers, but I know the general story, and so yeah, that's really, what we look at. And there's, to answer your question specifically, I mean, each property management software, they have specific reports that they send us on a weekly basis. And then my asset manager has created the Catalyst KPI tracker, which he puts in, because we've got different properties and different systems, puts it in. So then we've got our list of 15 or 20 KPIs that we review weekly.
Yeah, no, that's helpful. I just want the listeners and myself to hear the things that are important to you, and I love that. Hey, you have a specific list of leading indicators that you're watching on a weekly basis. I think that says a lot as well. Somebody on the team needs to be doing that, right?
Yes. Yeah, no, absolutely.
It's so important, and keeping a pulse like that, and even weekly, and sometimes even more often. Maybe depending on the asset and what's happening there, right? Speak to them. And we'll start this, and just so listeners know, we're going to do another segment with Shane. We're going to dive in a little further into the communication with investors as well. But maybe, how many people are involved in the process, I guess, of converting, say, this information to, your investor updates?
Yeah, I think it's really 2, or 3 when you consider me. It's our asset manager that is compiling all the data. Obviously he's working day to day, in it. So he's, aggregating it, and the thing is, going back to your earlier point, we've systematized this so that any report coming from Catalyst has the same structure, right? We've got sponsor commentary, P&L, et cetera, but then the deal story changes per deal, right? And then we've got our CFO that helps us review to make sure that, because as you know, Whitney, these are capital intensive businesses, right? And I think, the reality is that, there's a lot of ins and outs, and we're talking about thousands, sometimes hundreds of thousands of dollars that are going, when you're getting a draw and you're waiting for a draw, you need to submit a draw and whatnot. So we're just making sure that, we're understanding the cash inflows and outflows. And so once the asset manager and the CFO work together to make sure, okay, do we have that story? Then, I come in and my partner come in to review, just to make sure, like, there's, some deals we have rate caps or and floating rate debt, right? So how to articulate that to investors, right? What is the, bigger picture, end goal of this deal? Are we planning on refinancing in 6 months? Are we going to try to sell? What are the trends? So that's where we come in to kind of tip and top. But I would say between the asset manager and fractional CFO, 90% of it's done. And then we come in to tip and top and make sure we send it out.
Love that. And one quick thing, and this, and we're in the middle of this as well, but you're a fractional CFO. And so they're not, just so the listener knows, you can you can't hire somebody fractionally, in that role, right?
Yeah.
Speak to how you found this person and maybe, how you implemented a skill set like that that's maybe not an employee, right?
Yeah. I think it was, as we alluded to, I mean, asset management and doing the financial reporting, I mean, just based on what I just said, it's a lot of work. And to be quite honest with you, it's a full-time job, right? So we got to the point where we were doing this role, what I just described, between me and my partner for the first 3 or 4 deals, right? And it helped us tremendously because we were close to the details and whatnot, but it was hard for us to grow because once you can't do it after you do, 5, 6 more deals. And so, we, hired our asset manager. And then, from my perspective as an LP and other deals, quite frankly, it just, the property management company, their job is to manage the property, and they do property accounting. And, not to put up any shade on property management companies, but they're just getting the books done and sending them out to you, right? They don't have the foresight to say, hey, is this deal in a bad cash position or not? They'll come to you when there's no cash to pay payroll, but they're not thinking about, hey, 3 months ahead, right? And so, I was in a couple of deals where I just, I would look at the balance sheet and I would say, well, we got no working capital, we got no cash, but we're paying out distributions, and anyway, so using those experiences, we never wanted to be in that position. And we just said, okay, let's go try to find someone that understands our business. So found somebody actually online on LinkedIn, was doing this on a smaller scale. And, we kind of developed a relationship. He actually worked at a previous employer of mine. So we kind of shared some common ground. And I think at the time we were probably one of the bigger, multifamily clients of theirs. And we just kind of just said, hey, let's do a contract little basis, and kind of did, I don't know, 10, 15 hours a month. And then we've scaled that up as we've grown. And it's been great. We collaborate in a lot of ways, and he's an aide,
I just think a lot of people don't even know that that's an option, like a fractional CFO. You can have, say, that level of expertise still on your team, even if you can't afford, say, a full-time CFO yet. Just so the listener knows, you can still have that expertise on the team, and maybe 5-10 hours a week. And
I would highly recommend it.
I highly recommend it as well. As soon as possible, that you can have that expertise, like we were talking about earlier, that Shane has. It's like having that level of accounting background. I just feel like is a must when you're managing this kind of capital, right?
Yes.
It's so much of what we do, and you just need somebody that, and they just love the accounting piece, right? Not everybody does. But well, Shane, you know what? Let's we're going to stop here for this segment. But just so the listeners know, we're going to do another segment with Shane tomorrow, and we're going to dive in. We're going to take this even further, from the say property management reports and asset management onto bringing this to investors and how they do that. And maybe some do's and don'ts that we've both learned, over the last number of years. But Shane, tell the listeners how they can get in touch with you and learn more about you.
Yeah, you could. I'm available on LinkedIn. Shane Thomas. You could find me on LinkedIn, and then our website's catequity.com, CAT equity.com, and you can email me at shane@catequity.com.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.